In this video, I'll talk about how the fear of missing out, also called FOMO, affects crypto and what it could lead to. Don't forget to subscribe. Let's head into it. How fear of missing out affects the cryptocurrency market. Cryptocurrencies are a global market, and just like any other market, they are subjected to the influence of dozens of different factors. They can be impacted by regulations, the present state of the economy, supply and demand, new technologies, and a number of other factors. However, unlike other traditional financial markets, there is one thing in particular that has an incredibly strong impact on the cryptocurrencies. That is FOMO. What is FOMO? FOMO stands for fear of missing out. The fear of missing out often affects the cryptocurrency market when investors start to become concerned that they're going to miss out on a buying opportunity that could lead to an enormous triple or quadruple digit gains. FOMO can still sometimes apply to other markets, not just cryptocurrencies, but it does seem to affect cryptos much more than others. Why is FOMO so relevant in the cryptocurrency market? The fear of missing out is incredibly relevant for the cryptocurrency market because some of the most breathtaking gains in the history of finance has been seen with these digital currencies such as Bitcoin, Ethereum, and Litecoin. These cryptocurrencies ascended from just a few cents to being worth thousands or even tens of thousands of dollars, as was the case with Bitcoin. Many people in the cryptocurrency investing space are well aware of the immense opportunity that still exists in the cryptocurrencies today, and no one wants to miss out on the next incredible rise. What this means is that as soon as enough people think that a particular cryptocurrency has the potential to go on a big run, large numbers of people can start buying the cryptocurrency because they have fear of missing out and they don't want to miss the big opportunity. FOMO is much more of a factor in the cryptocurrency market than it is in many other markets. This is because blockchain technology and cryptocurrencies are both still in their infancy, so many people believe that there is an enormous potential for exponential growth. Oftentimes, the investors who make the most money on an asset are the ones who bought in the earliest. This historically has been true for many stocks, including giants like Apple, Google, Tesla, etc. And it's the exact same for cryptocurrencies. Anyone who bought just $50 or $100 worth of Bitcoin in 2010 would have seen their Bitcoin holdings grow to be worth millions of dollars at today's prices. So the enormous gains seen by some of the top cryptocurrencies help to fuel investment in other coins. That is due in part to fear of missing out. The bigger picture. FOMO does help to drive the value of some individual crypto coins significantly higher. However, it is not just the individual coins that will benefit from FOMO. In fact, the entire cryptocurrency market at large benefits from FOMO. The market is currently experiencing something of a stampede of people rushing to get their hands on some cryptocurrencies. Coinbase, the largest US cryptocurrency exchange, already has over 11 million users, and they only opened a few years ago in 2012. The company is adding users at an incredible exponential rate. In fact, it added over 100,000 users in a single day after it was announced the CME Group would add Bitcoin futures trading. FOMO is fueling the massive rush of people into cryptocurrencies. It's very similar to other historical FOMOs, such as the FOMO that drove hundreds of thousands of people to mine for gold in the Klondike in the late 1890s. In fact, many people believe that cryptocurrencies are a digital form of the modern-day gold rush. Some even go as far as to call Bitcoin digital gold. With so many people flooding into cryptocurrencies every day, partially fueled by FOMO, there is a very good chance that the value of the cryptocurrency market at large will continue to grow for some time. Other factors contributing to cryptocurrency FOMO. Besides the fact that people see tremendous potential in blockchain technology, there are several other things that are helping to drive the cryptocurrency FOMO. The first thing is that at the present moment in time, the vast majority of all national currencies are fiat currencies. This means that there is nothing backing them other than blind faith. The faith of the people is all that separates a $20 bill from a $20 monopoly bill. For all other intents and purposes, the two bills are essentially the same. They are both approximately the same size and shape, made out of similar materials, etc. For most of history, physical precious metals and/or gold or silver-backed currencies have been the dominant monetary force. Even so, many governments view it as inconvenient to have their money tied to something tangible like precious metals, which have intrinsic value. This is because having gold-backed money makes it harder to spend infinitely on wars, social programs, and such. Final thoughts. Fear of missing out is one of the most powerful factors impacting the cryptocurrency market today. Of course, it is not the only one. The FOMO surrounding cryptocurrencies is extremely strong and has been highly significant so far. Coinbase is just one exchange, and the fact that it has added over 11 million users in 5 years is a perfect demonstration of the enthusiasm around cryptos. There are dozens more cryptocurrency exchanges behind Coinbase. It is possible that at some point in the future, the FOMO for cryptocurrencies could slow down, somewhat because large enough numbers of people have gotten into them. This could hypothetically slow down the rates of new accounts being opened on cryptocurrency exchanges. There are billions of people on the planet, so there could be a long time before a real slowdown occurs, until such a slowdown takes place, or unless governments all decide to ban cryptocurrencies. The crypto FOMO is likely to continue well into the future. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so that you don't miss any of our videos in the future. With that, I'll see you in the next video.